Stop everything you're doing, put down your trading app, forget about your charts, and focus on what I'm about to show you. You're about to witness a financial bombshell that's been quietly dropped, and if you're not paying attention, it could cost you big. On January 16th, 2026, the U.S. government did something so monumental that it will be analyzed in economic textbooks for decades to come. They didn't just adjust the price of silver, they admitted the truth. They've confessed. And if you miss what happened, you'll regret it for the rest of your investing life. This isn't speculation, and it's certainly not theory. This is a documented fact from an official government source. The U.S. Mint, the very institution responsible for printing the currency in your wallet, has just exposed a massive crack in the financial system. What they did is more than just a price adjustment. It's an admission that the system is broken. Look at the screen right now. The price says $90 per ounce for silver, but the U.S. Mint, they just listed it at $173, double the price. That's the government telling you where the real value is, and it's not in the paper market. Why would they do this? Stick with me, and I'll explain why this is the beginning of a massive shift in the markets. This isn't just another blip in the market. This is a full-scale warning shot across the bow of every investor in the world. The U.S. Mint didn't just quietly adjust their pricing system. They effectively told you that the silver market is a complete illusion. Right now, the spot price on your screen says $90 per ounce. That's the price everyone sees. But behind the curtain, the U.S. government is quietly saying, no, it's worth $173. Why? That's the crucial question. It's not just a random adjustment. This price gap is a direct sign that something huge is happening. You might think, well, the mint isn't selling coins right now, so this doesn't matter. But that's exactly the point. They didn't just raise prices, they're front-running reality. They know the price of silver is about to explode, and they're preparing for it. Why would they even bother adjusting the price if they're not planning to sell anytime soon? Simple. They can't afford to keep the price artificially low any longer. The real cost of silver has been hidden for years, and now the mask is coming off. Notice how the paper market in New York continues to pretend silver is still worth $90. That's the illusion, but the mint has just shattered that illusion. When the time comes, and it will come soon, the true price of silver will be revealed. But here's the kicker. The moment they open those sales windows again, it won't just be a simple adjustment. It's going to be a scramble. The real price will catch up, and if you're not prepared, you'll miss the wave. Let's break this down. The U.S. Mint just revalued silver at $173 per ounce. That's nearly double the spot price of $90. You might be thinking, okay, maybe it's just a pricing error or a one-time thing, but no, this is a massive signal. And here's where it gets wild. This isn't just a simple markup. It's an official admission that silver, as a physical commodity, is worth far more than what the paper market is telling you. Think about it. The mint sets the price at $173, yet the spot price is still stuck at $90. What does that tell you? It's telling you that the paper price, the one you see on your trading app, doesn't reflect the true value of silver. The paper price is a fantasy. The physical price is the reality. And here's what's even more mind-blowing. The mint can't even afford to sell silver at the $90 price anymore. They know that if they did, they'd be giving away a national asset for pennies on the dollar. So they've made a move to protect their real value. Now notice what's missing here. The people who control the money, who print the currency itself, are telling you that silver is worth more than they've been willing to admit. They're not just adjusting prices, they're trying to signal something much bigger, and that's where you come in. If you're still buying silver at $90, you're getting a deal that might not last much longer. The moment the market catches up with reality, you'll wish you were ahead of the curve. Now let's look at the bigger picture here. This isn't just a simple price shift. It's the beginning of a financial war. On one side, you have the paper traders on Wall Street who are desperate to keep silver's price as low as possible. On the other, you have the physical market, where real silver is being pulled off the shelves faster than anyone can restock. The U.S. Mint has already sided with the physical market by pricing silver at $173. They're telling you that the value of silver is much higher than what the paper market reflects. This isn't a small tweak, it's a direct challenge to the entire system. In the past, when something like this happened, it was a fluke. But now, it's becoming normalized. The price disconnect between paper silver and physical silver is growing by the day. And here's the thing, the longer this gap exists, the more unsustainable it becomes. What we're witnessing is the collapse of an illusion that's been built up over decades. Remember, this isn't just about the price of silver. This is about the very foundation of the financial system. The U.S. Mint has just signaled that the paper market is broken. The question is, how long can it last? And when it finally collapses, what happens to all the paper contracts and promises that have been built on a foundation of nothing? Now, if you're still skeptical about this price gap, let me hit you with something even more disturbing. The disconnect between the paper price of silver and the physical price is not just an anomaly, it's a massive red flag. The United States Mint didn't just quietly adjust the price, they doubled it. And why would they do that if they weren't signaling something bigger? Because they know what you're about to find out. The paper price of silver is a mirage, and the moment it collapses, everyone who's been relying on it will be left with nothing but empty promises. Here's where it gets even more interesting. While the U.S. Mint was quietly raising their prices, the paper market was doing everything it could to suppress the price. Just days before the price was violently hammered down to $86, the banks thought they could suppress the value of silver even further. But what did they miss? The Mint's move. By increasing their price to 173 liras, the Mint has made it clear. This isn't just about silver being undervalued, it's about the complete failure of the paper market. And the reality is the market can only suppress the price for so long before the truth comes out. When it does, it will change everything. The paper price isn't the real price. The real price is the physical price, and that's what the Mint just revealed. But here's the kicker. This price discrepancy won't last forever. Now, this isn't just one isolated incident. It's the beginning of a series of rapidly escalating events. First, we had the Mint's shocking price adjustment. Then right after that, the banks tried to manipulate the market by smashing silver down to $86. They thought they could trigger panic, cause people to sell, and cover their massive short positions, but they failed. Silver held steady, closing above $90 for the first time in history. The market didn't budge, and that's when things got even more intense. The following Friday, the vaults started to empty. Over 4 million ounces of silver were pulled out of the COMEX vaults in a single day. Do you know how much that is? Over 130 metric tons of silver just vanished. This wasn't a random transaction. It wasn't a single buyer scooping up a few ounces. This was a massive coordinated heist. And it wasn't just a coincidence that this happened after the price drop. What happens if this continues? If the vaults are emptied at this rate, the entire system will be drained of liquidity. The physical silver that supposedly backs the paper market will be gone, and the banks will be left holding the bag. They won't be able to deliver on their contracts. The paper price will be exposed for what it is, an illusion. The real value of silver is out there, but it's not on the screen. It's in the hands of those who know what's coming. Now let's step back and think about what all this means for you. If you're an investor in silver, this story is about to affect your life in a big way. When the paper market collapses and the real value of silver emerges, it won't just be the banks and the big players who feel the heat, it will be the everyday investors, you. If you've been holding silver as a hedge against inflation or as a store of value, this is your moment. But it's not just about the price going up. This is about the integrity of the entire financial system collapsing. And when it does, what happens to all those paper promises that people thought they owned? Those ETF shares, those futures contracts, they're not worth anything if the physical metal isn't there to back them up. If you've been buying silver for the right reasons, this is the time to hold your ground. You're not just holding metal, you're holding something far more valuable, a shield against the inevitable breakdown of the paper system. If you're still sitting on the sidelines wondering whether you should jump in, the time to act is now. And I know what you're thinking, isn't this just for the big players? Am I too late? But here's the thing, the biggest players are scrambling to grab physical silver. The banks are pulling it out of the vaults as fast as they can. And if you're waiting for that perfect moment, that moment might pass you by. The retail investors who've been steadily stacking silver are about to be in a position of power, but only if they don't panic. Now, let's zoom out and look at the bigger forces at play here. This isn't just about silver, it's about the entire system that's enabling this to happen. The truth is, the banks have been playing a dangerous game for years. They've been using paper contracts to control the price of silver, while behind the scenes, they've been hoarding the real metal. Why? Because they know the value of real assets like silver is rising, and they can't afford to let that truth get out. The system works like this. Banks create a huge pile of paper contracts that represent silver, but they don't actually have the metal to back it up. They've been able to keep the price low by flooding the market with these contracts. But here's the problem. When people start demanding the physical metal, like they are now, the whole system starts to break down. The banks can't deliver on their promises. The paper market becomes exposed for what it truly is, a house of cards. This is the kind of system that's allowed the rich and powerful to get richer, while ordinary investors have been left holding the bag. But now, the cracks are showing, and what the U.S. Mint just did with its price adjustment is a signal that the bank's grip on the market is slipping. They've lost control. The question is, how long will the paper market hold up before the entire system comes crashing down? So where does all of this go from here? Let's explore the two paths that are unfolding in front of us. On one hand, the paper market could continue to fight for control. The banks might try to push prices back down using every trick they've got left. They'll continue to flood the system with contracts, hoping to delay the inevitable. They'll push for one more flash crash, trying to shake out weak hands and suppress the price. But here's the other scenario. The physical market takes over. The gap between the paper price and the physical price is growing wider by the day. The U.S. Mint has already signaled that they believe silver is worth $173. And as the physical metal continues to disappear from the vaults, the paper market will have no choice but to catch up. This is where things get dangerous. If the banks can't cover their short positions, if the physical silver runs out, the paper market will implode. The price will explode, and those who are still holding physical metal will be the ones who come out on top. But it won't be pretty. The transition from paper to physical will be chaotic, with huge price swings and market dislocations. The real question is this: who will be ready when the floodgates open? Because when the paper market collapses, it's going to happen fast. And it will be a massive opportunity for those who are prepared. And that's where we stand right now. The U.S. Mint has just tipped its hand, showing us where the true value of silver lies. It's not $90 per ounce, it's $173. The paper market is a mirage, and the physical market is tightening its grip. The vaults are emptying, the banks are scrambling, and retail investors are piling in. This is the great wealth transfer that the banks never saw coming. Those who are holding physical silver are sitting on an asset that is about to skyrocket in value. The ones who are still holding paper contracts or ETFs, they're in danger of getting caught when the music stops. But here's the kicker. This isn't over yet. The gap between the paper price and the physical price isn't going to last forever. One way or another, the paper price will have to catch up. The question is, will you be ready? Make sure you're following for continued analysis on what's coming next. This is only the beginning. When the next major move happens, you'll want to be ahead of the curve, not chasing the crowd. Keep your eyes on the spread, stay informed, and hold on tight, because this ride is just getting started.